Question 8. Topic Input tax credits. Can a business claim credits on office rent expense where business includes both taxable as well as exempt supplies? The answer is office rent in this instance will be called something like a common credit. This is because it is a common expenditure which is used for both taxable supplies as well as exempt supplies. One can definitely claim this credit. However, proportionate reversals to the extent of exempt supply need to be done on a month-to-month basis, and on an annual basis it needs to be recomputed and corresponding adjustment needs to be made. The input tax credit reversal provisions provide that whenever an input tax credit is used partly for effecting taxable supplies and partly for exempt supplies, then there is a restriction with respect to the input tax credit only which is available to the tune of taxable supplies, because the GST ITC mechanism is a credit chain system where the credit is available to the tune of taxable supplies. Again, the rules provide for the manner of how the ITC needs to be reversed. It's a simple formula, very logical, and in the ratio of exempt and the total turnover. And this computation needs to be done on a month-on-month basis, and finally it should be computed on a yearly basis, and the adjustment thereof should be made within September of the following year. Let's take an example where all supplies company is engaged in the business of branded rice and unbranded rice. Branded rice is taxable, unbranded rice is exempt. Input tax credit on office rent is rupees 10,000. In the month of April, the total supplies is 10 lakhs and the exempt supplies from unbranded rice is 2 lakhs. And for the entire financial year, the total supplies is 2 crores while exempt supplies from unbranded rice is 50 lakhs. Now, for the month of April, the ITC reversal is required in this proportionate manner of exempt versus the total turnover, which comes up to rupees 2000. This needs to be reported in table 4B1 of GSTR 3B of April month, and the corresponding reversal needs to be done. However, similar computations would have occurred from April to February. In the March month, it can be done for the entire year, and either upward adjustment or downward adjustment can be done in the month of March, or it can be even done in the corresponding year within September of the following year as required by the rule discussed earlier. Thank you.